Are you a gambler in the stock market or are you actually a trader? I can guarantee you the answer you think you know about yourself is probably wrong. And this video is going to change your outlook on the market and some mistakes that I see a lot of people make when they think they are quote unquote trading. I'm confident that the details that we're going to discuss in this video will make you realize some important aspects to successfully trade the stock market. I'm going to show you the charts and the trading setups, along with some psychology behind each point that's going to really tie it in all well together. Before we get into it, I recommend everyone to follow me on Instagram at Ameritrade. I will link it in the description below. I post daily trading recaps on here, along with very good trading tips and tricks that I guarantee you are not going to find anywhere else. The link is in the description below. And now let's get right into this video. Really keep an open mind, because a lot of the mistakes I see new traders make is they approach the market with a gambling mindset. They want to get rich quickly. They want to make a quick amount of money in a short amount of time. They see others doing it and they expect the same. A lot of people get sucked into the market because they see other people on social media posting crazy cars, nice watches, fancy lifestyles, and they expect the same result in such a short amount of time. It is very possible. The opportunities that the market presents is infinite. And while it is possible, you have to be realistic and really focus on the right things. And by gambling in the market, which what I see a lot of new traders do, you are never going to replicate that success. A lot of these traders do not have a real strategy. They don't have a real edge. They don't even know what the word edge means. And they trade based on what others think is going to happen, or they just trade off of others sending out alerts. I'm buying here. Okay, he's buying here. I'm going to buy with him as well. That's not a real strategy. That's not a real edge. And there's no real education in that to really make you self-sufficient in becoming the trader that you want to be in the long run and making money consistency. I see a lot of traders. I'm going to pull up a random chart here on the S&P 500. I'm going to remove this. They see the market coming up. They think, oh, just because it's coming up, let me buy it. They buy it and then the market dumps. Or they see the market coming down. Oh, it's coming down. Let me short the market. They sell the market and then immediately it moves back up. How many of you bought a position and right after buying it, it stops you out and then it moves in your favor, or vice versa? That's the way the market works. It needs retail traders' liquidity. And by you going into the market blindly without a real strategy, without a real edge, you are just a little fish swimming in a big ocean, providing liquidity for the traders that have real strategies and real edges. You're giving them your money. You are gambling. You're just throwing it away. So don't trade based on what you think is going to happen, or don't trade based off of others. You're the only one that's going to pull the buy or sell button. And a lot of these people, because of that, they don't have confidence. They don't have trust in themselves. They go into the market, like I just said, with no trading plan. They open random positions. Adrenaline rushes. This was a big one for me. So, when I first started, this goes for everybody. It's human nature to have a gambling mindset in the market, right? We see the market coming up and we're like, okay, I'm going to long the market here. I'm going to make a crap ton of money in such a short amount of time. Our adrenaline rushes, our emotions get involved because we want to succeed. We want to win. We don't want to be wrong. And we want to make a lot of money that our ego proves itself to be right. And our adrenaline rushes and then emotions get involved. And then immediately we take a big hit. And this process just repeats and our account bleeds every single day. That's how it's going to be when you're a gambler, because you have adrenaline. You make irrational decisions because your emotions cloud the judgment. You overtrade. You're down $1,000 on the market. Okay. You want to make that money back. You get into another position. Now you're down $3,000 on the day and you're really upset. You have emotions. They're clouding your judgment and you get very frustrated. You become too attached to the money. I say this on all my videos. The money follows the process. By you becoming attached to the market, you are really trying to control something that you have no control of. A lot of people do that and they blow up accounts because they don't practice proper risk management. They go into the market with too large position sizing with expectations to make a large amount of profit. Perfect example of this was Tesla had a nice rally inside of the supply zone. Let's just say we play the market short down here at 1072. We play Tesla 1050 puts at this point. We're in 10 contracts. We're trading with 100% of our account size, which is a big recipe for a blow up. We don't have proper risk management. Then the market starts coming down. Maybe we're up, $500 or we're up $1,000, and we're like, great, I want to make $5,000 on this trade. You're gambling, right? Before you enter this trade, you didn't even have a plan. Then the market starts coming up, starts reversing, and at this point, you're down now $2,000 when it comes to this supply zone again. Then it double tops at the supply zone and gives you the sell-off that you wanted originally, right? We get that sell-off. Now, if we, didn't stop out up here at the highs because we were down so much money, we didn't practice proper risk management, we would have had a nice winning trade on our hands and a clean, 20-point sell-off from that supply zone. So a lot of gamblers, they go in with large size. They trade with too heavy position sizing, and that clouds their judgment because they want to make a large amount of money. Get rid of your money-making mindset. I can guarantee you, if you focus on the process, the money is going to be there. It's going to follow. Get rid of that making money mindset when you're first starting. And because of this, a lot of gamblers let the market control them. If you let the market control you, your outcomes, your decisions, you're going to lose every single time. Gamblers cannot control themselves. They have the itch to always trade. Today on the S&P 500, in the first 2 hours of the market open, we moved in a 16-point range. There was absolutely nothing going on. There was not too big of an edge in the first 2 hours of the market open. And gamblers are going to see this. They're going to see the market moving up, maybe moving down, and they're going to see the price action, and they're going to think, they're going to have the itch to always have a trade on. You have to have a trade on when your setups trigger. If you can't control yourself to sit on your hands, you're letting the market control you, and you are severely going to struggle. A lot of people too, when they take losses, they get mad at the market. They punch. I seen something on Reddit one time. Someone literally punched their computer screen when they took a big loss. Those are serious emotions. You're letting the market control you. You are not trading. I've sat with traders on Wall Street that lost 6 figures, close to 7 figures on a trade. And they left the market and went downstairs and had a beer 30 minutes after they took a large loss. Large traders that actually trade and are not gamblers do not have mood swings. They do not let the market control themselves. They don't get angry when they take a loss because they know they can make it back if their system works and they do have an edge in the market, and they choose life over the market. A lot of gamblers think that the market controls them and their market is everything over life. Life is so much more important than the market. Stop gambling. These people think it's like a casino. They think they have to get lucky. They literally gamble their money away without the odds being in their favor, and you're better off burning your money than trading it. Honestly, like I said earlier, you're providing liquidity for the smart traders that have an edge. You're literally giving them your money. So stop gambling, and you're going to see what the next section is about traders, what you have to do, and really focus on this. So if you agree with any of these gambler points, you really need a lot to reconsider and listen to what I'm going to say right now about being a trader. And if you look at any successful trader, I don't care who it is, I've sat with plenty of successful traders, family members, friends on Wall Street, and they all have the same common similarities. They all focus on the process. They think long-term, bigger picture in mind. When you are a new trader, we're susceptible because we aren't aware of some simple things. We're susceptible to thinking that this is easy and it's going to come fast. Like I said, it is possible, but they leave the bigger picture and they think too close-minded and in a short amount of time. Your process brings you consistency, and your consistency brings profitability. People just jump to the end and they think they have to jump right to profitability. But if you focus on the process, that's going to bring consistency, and consistency is the only thing that's going to bring you profitability. Look at all the people back on when GameStop and AMC first started to run. Think of all the people that made a lot of money in a short amount of time, right? If you're one of them, I could guarantee you 75% of them lost all the money they made back when they traded AMC and GME, GameStop. I can guarantee you over 75% of them lost the money. You know why? They made a lot of profits without ever going through the process and without ever finding consistency. And then when they think they figured out the market because they made a lot of money in a short amount of time, when it came to actually trading and focusing on their process, they failed to do so and they lost a lot of money because they never had an edge. Traders trade with an edge. Gamblers trade without an edge and without a system that proves to work. Traders go into the market with confidence. Why do they have confidence? Because they trade with an edge. Their edge gives them an advantage over the competition. For me, my edge is price and volume, supply and demand analysis. It's very broad. I break it down into detail a little bit, but it's very broad. You know, we have a supply zone. I look to take the market short. We have a demand zone. I look to take the market long. There's some obviously, other details involved in it, but a lot of traders don't have an edge. They don't have a reason for entering. So, it's what works the best for me. I use it all the time. And why I use it all the time is because it's what makes me consistent. It's my process. It's what I make the most amount of money on consistently. Everything else is noise. 90% of the time, 95% of the time, if I can't read the market or if my edge is not present, I do not take the trade because I look at everything else in between as noise. And you are prone to making decisions irrationally if your edge is not present. That's a really big point right there. And when my edge is present, the odds are in my favor. It's high probability setups where a trading plan is created and my criteria is met before the trade is put on. A good example is Apple. So let's look at a trader first. A trader is going to recognize, hey, I'm going to speak as myself first. Okay, hey, we have a demand zone down here at 172. Apple bounced off of it perfectly. We look at underlying markets today. Underlying markets had a strong morning rally. Strong morning rally over here. Apple hit demand. Apple starts rallying. Okay, I'm taking the market long above 172.50 right here. Stop loss below the lows. I'm risking about 50 cents and supplies at 174. So I could potentially make $1.50 on this move and I'm risking 50 cents. This is known before the trade is put on. I'm in this position. This thing starts working out. And keep in mind, the levels are here before the market even opens up. This isn't, okay, I'm going to set an unrealistic target and I expect the market to reject there. No, this is set up before the market's even there. 172.50, maybe I sell at 174, hit my plan perfectly. You're never going to get the biggest portion of the move. And I move on. Gamblers are going to see this thing, let's say if they even know what a supply or demand zone is, they see the market bouncing, they get in long all the way up here, right? They're in all the way up here. Their risk to reward is skewed. For their analysis to be incorrect, they would have to get out down here. And if their reward is up here, it doesn't make sense from a risk to reward standpoint. They don't have a solid plan before entering. They're getting in blindly. They don't know what's going on, and they're just entering based off of a whim. A trader knows his signals. He knows what makes him money. And when he sees it, he acts without hesitating because the odds are in his favor and the plan is created before the trade is put on. I found it to be a lot easier, and I see it with a lot of new traders, is they try to put trades on and plans on a whim. A lot of the best setups that I see new traders make, and I recommend this, is to create a plan before the market even opens and wait for that to trigger. If it doesn't trigger, who cares? But that's how you're going to figure out the best setups, what works for you the best, and avoid everything else because it's noise. A lot of traders, I would say this is probably the biggest one, is emotions. It's human nature to have emotions, and it's really impossible to completely block them out of our trading, but we have to control themselves just as much as we control ourselves in the market. So the market's going to try to control our emotions. We can't let that happen as traders. So we got to remove the ones that are detrimental to our success, fear and greed. This becomes possible by you just following a plan. And we got to accept that trading is one of the most scalable businesses. If you can make money consistently, I don't care if it's $10. I don't care if it's $50 in a day. If you could do that consistently, right, by following your process, nothing's stopping you from making $1,000 in a day or $5,000 in a day. All you got to do is increase your position size and control the emotions when you do build it up. It's one of the most scalable businesses. And once you accept that, you really got to focus on the small aspect of trading. And then once you master the small aspect to it, all you got to do is increase your size. And what was once small is going to be much larger by you doing nothing different than just following your process. And the best traders accept that losses are a part of the game. They are inevitable. You cannot avoid them. I have losses. The best traders on Wall Street have losses. If someone doesn't say or someone claims they don't have losses, they have a system that wins 90% of the time, I can guarantee you it's garbage. Once you accept that losses are part of the game, it becomes much easier. I'm okay with taking losses. You know why? Because I know my losses are going to be small. Because I put myself in a position before I even enter the trade to make sure that if I am wrong, I'm going to be wrong in a small amount. Traders or gamblers that go into the market, they don't make sure they're wrong in a small amount. They just go into the market not thinking they are going to be wrong. They enter up here, stop loss is way too far, and they just, screw up. Obviously, this trade worked out, but you can't avoid losses. You have to make sure, though, that they are small. There's no such thing as a large loss in trading. Small losses and big wins only. Small wins as well. Forgot to include that. Because traders obey proper risk management. It's obvious. And you got to treat this like a business. It's not easy. Don't expect it to be. Some businesses don't even make a profit after the first year or two. Like I said, a lot of gamblers, they expect this to learn the market fast, make a lot of money fast, and they just blow up. They're detrimental to their own success. Treat this like a business. Businesses have many different avenues. Businesses have many different structures. Businesses have many different people they need to be aware of. Competition, customers, bookkeeping, our journal, stuff like that, right? You got to treat it like a business, not a hobby. Don't gamble. If you gamble, you should just go to the casino and understand that the process brings the profits. Get rid of the money-making mindset. Focus on the process. Start small, and I can guarantee you're going to start seeing consistency in your trading. So I hope this video helped. Drop a like if it did. I would really appreciate it going down this route for psychology. Comment if you have any questions, and definitely check out the links in the description below. I offer a very in-depth and educational course that comes with access to the Discord at no extra charge. I will be raising the prices pretty soon, but on that note, I'm going to end it. Peace out.